Welcome, Coleman Certified SBA Loan Training Office Hours, January 18th. Welcome back. For those of you who viewed us for the first time last week, you're welcome to join us. Welcome. Hi, Lance.
It's a great day in Arkansas, Bob.
Michael, I have no sound. I need help, please.
Are we good?
I apologize. That's how you ask questions. Lance, can you give me a thumbs up if you hear me?
I do.
All right. I just can't hear you. That's how to ask questions. And Tiffany, I appreciate your questions. We're going to get to those. Let's go ahead and go to the next slide, Joseph. Let's do the poll questions. Lance, I'll tell you what, I'm going to let you do this while Michael figures out my slide. Go ahead, Lance, set it up.
Is your institution set up on SBA 1? And we ask this question frequently, and a part of it's just to continue to emphasize the importance of your institution getting set up on SBA 1 and having trained users. SBA developed this platform about a year ago. And certainly my expectation is eventually it will be the only way that you can submit a loan to SBA. So let's see what the results are. And the fun part of it, well, and that's excellent. I'm excited to see that over 70% of people are set up on SBA 1. Now, the follow-up question that I didn't ask, there are a lot of folks who are set up on SBA 1 who are not effectively using SBA 1. If you're set up, this is how you need to process your loans because there are so many efficiencies that your bank or lending institution will realize by using SBA 1. Let's go to the second question. Do you know your institution's PAIR score? And what impacts that score? We've got a webinar coming up at the end of the month covering PAIR score, helping you to understand what creates that. And guys, it's an important measurement of how SBA looks at your lending institution, and it will impact a variety of things. It'll impact your delegated lending approval and renewal, as well as impacting whether or not your review is offsite or onsite when SBA decides to review your bank. And again, there could be a follow-up question on this. Does your bank like an on-site review? Well, the best way to potentially avoid that is to have an exceptional PAIR score.
And Lance, you and I have talked about that. We both tend to skew toward transparency. We think it should be something that it should be department-wide. I mean, what do you do with that, Lance?
Bob, I actually, at a bank that I was at previously, would hold a 1-hour session, pull the PAIR score information up on the screen and walk through it. And the cool thing is you can hit a drop like high origination loans. You can click on it and drop down and it will list those loans that SBA, indicates are high risk origination. And that helps. It helps lenders. It helps BDOs to understand the kinds of projects that you want to pursue as an SBA lender and the kind of projects you may not want to pursue.
Is your institution currently reporting to the credit bureaus on your SBA loan borrowers who are delinquent?
Well, this has been a requirement for more than a year now. And I have not heard SBA say, hey, we're going to jump out and penalize your institution if you're not doing it, but this has been a requirement by SBA. You're supposed to report on your SBA borrowers. You do not necessarily have to report on the guarantors, but you're supposed to be reporting on the borrowers on your SBA loan. And part of the reason SBA wants you to do this, SBA credit scores the loans. There's an E-Tran credit score, and what SBA is trying to encourage is more reporting on borrowers, so there's more information. The credit score becomes more and more reliable.
Lance, for those who answered, 33% who said no, where do they go?
You want to every bank pulls credit. We pull credit on individuals, on guarantors. Get with the current credit reporting agency you're working with. Tell them you need to be able to report credit on business borrowers, and they'll help walk you through the process. And I had to go through this at my previous bank, Bob, and it was a little frustrating because it was not easy, but it is a requirement, and if you're not doing it, you need to start working on it.
And to clarify, we're not reporting credit on the guarantors, right, Lance? We're simply reporting it on the business entity.
We're reporting on the business, the borrower, not the individual
not the guarantor, not the guarantor, but it needs to be on the borrower.
Yeah.
Very good. Thank you. Number 4, how many SBA loans does your institution have that have been in liquidation for more than 24 months? Lance, why do we keep asking this question?
Well, Bob, this is old news, but I suspect there are banks out there that have not taken care of this. In the release of the SOP 5057-2, there were some specific guidelines on loans where the guarantee has been paid, and the guarantee, it was related. This came into play December 1st, 2015, and it said if the guarantee had been paid prior to that date, a wrap-up report and recommendation for charge-off had to be completed by December 1st, 2017. Now, guys, that date is passed, but the reason I continue to bring it up, if you have those loans where the guarantee has been paid prior to December 1st, 2015, if you have one that's not wrapped up, you need to either wrap it up or ask for an extension from the appropriate SBA servicing center. And going forward from December 1st, 2015, when a guarantee is paid on an SBA loan, you have 24 months from that date to get it wrapped up. So, and SBA did indicate that if a lender ignored and had a large list of loans that had been, the guarantee had been paid and hadn't been wrapped up in 24 months, that there were potentially some repercussions like non-approval of your renewal of delegated lending authority.
And we've talked about that, and you're going to get an invoice for the guarantee. So that's why we keep hammering this. Let's get this clear. My poll question is, do you believe your institution documents credit available elsewhere correctly? And don't worry, we're not tracking IP addresses, so don't.
Well, Bob, I hope the answer is yes, and if the answer is
why, but it's okay. That's why this is important. We talked about this last week of how important this is in the new legislation, and okay, that's about 2/3. And for those of you who don't worry about it. It's very specific in the SOP, and the new legislation is going to update that. So,
well, and here's the situation. You need to have credit elsewhere discussed on your credit memo, and you need to have credit elsewhere discussed in your loan file. So if you're not doing it, start.
Yeah, very good. And obviously the new legislation will be addressing this. We've talked about that. We've addressed it. So if you've answered, don't worry, but follow the current SOP. Be specific and document. That's the takeaway.
Guys,
we have a bunch of, I'm sorry, Lance, go ahead.
I'm sorry, guys. Credit elsewhere is really important, not just for the SBA, but it appears that our House and our Senate small business committees have taken interest in credit elsewhere.
It's very interesting. If you have a chance, go. Now I'm the one who's going off script. Go to our website, view the hearing that was held yesterday on the House about this. It's fascinating stuff for those of us who are policy wonks. So go ahead and at your leisure view that. We'll have some clips in next week's podcast. Let's go to the questions. Vernon has some great questions. He's in our loan broker class. Lance, you were kind enough to answer them, but I thought it'd be important for everyone to go through this. Now, he's a loan broker, so he's saying, hey, how do I get my money from my clients? Lance?
Well, I think the answer to that question is the money for the broker should be collected at close, should be reflected on the closing statement, and there should be a corresponding SBA Form 159 reporting that compensation. Now, outside of that, I'm not sure how you enforce a broker's fee other than you need to have a good relationship with the participant lending institution and ensure that that's collected at close.
Lance, I agree with you 100%. Also, we're transparent. We're all for transparency. Everyone knows where the broker is being paid. The bank is approving it in the statement that we feel this is a prudent type of arrangement. So I would take the disbursement of loan proceeds. Interesting question, Lance. How do you view this? How many different things should the broker go to before they said, we're going to move on?
Well, a lot of people on the call don't know that I was on faculty at a couple of universities in my career. And when I talked to students about coming to the university, I said, when you graduate high school, you have your dream college, you have the college you'll be happy with, and you have the alternative that what if everything else fails, I can get in here and get into college. Same thing's true with a broker working with banks. I think you put the deal in front of 3 different institutions. There are some circumstances, Bob, and I've had these kind of relationships with brokers in the past where we had a real strong relationship and they just bring it to me and they knew I'd get it done. But if you're working with banks that you don't have long-standing relationships, I think 3 banks is a good number to work with in terms of putting the deal in front of.
Vernon, also, back to the transparency team, I would say, Lance at Bank of the Ozarks, you're my #1 choice. Please take a look at that. I'm not shopping it. And I would develop those type of relationships with the banks. Now, Lance may tell you, Vernon, this isn't quite in our credit box. Please go to Bank B or Bank C. But I would not take as a best practice, take the package and submit it to 3 banks at the same time.
Yeah. I'll go ahead, Bob.
Go ahead, take the next one.
100% financing is available on SBA loans for existing businesses that have a strong net worth. What you're going to look at is blending the new project into the existing balance sheet and having a acceptable equity position after the project is blended in. There is no specific 100% financing program for veterans. It's the same for veterans as it is any other small business borrower. 100% financing is absolutely not available for startup businesses. There is a 10% cash injection requirement on any startup.
Remember also on veteran loans that we are waiving the fees, the guarantee on these loans up to, what is it, 150,000, Lance?
In the Express program, I think it's up to the limit of the Express program.
Up to 350. Okay. So how important is loan to value in commercial real estate for SBA financing?
That's a prudent lending question because when you look in the SOP 5010-5J says collateral is not a reason to turn down an SBA loan. So obviously SBA is not hung up on LTV. But guys, the banks, and Vernon, you're a broker working with banks. Some banks will still be hung up on LTV. Now, guys, and I don't want to, I'm sure we probably have a couple of C-suite bankers on here, Bob, but I'm just telling you, and I made this statement on the podcast that was out there, and if you haven't seen the podcast, click on it and watch it. I really enjoyed it myself. The deal is, if you're not making an exception to policy on your SBA loan, your commercial lending policy, you're technically violating credit elsewhere. So, and one of the areas where you can prove credit elsewhere is collateral does not meet the commercial lending policy. So it's kind of a 2-pronged answer, Vernon. It shouldn't matter, but it still may matter to the bank that's processing the SBA loan.
The underwriter also has the authority to approve the appraisal. We want our underwriters to sign off on these appraisals, even if it's 10% below the transaction amount. And it's a unilateral approval that you can do. You would actually go below 90%. You just have to get SBA's concurrence, which as long as it cash flows, SBA is probably going to do it. Right, Lance?
Yes, yes.
So it's a prudent lender decision. Finally,
guys, the absolute easiest way to prove credit elsewhere is collateral does not meet your commercial lending policy.
And finally, we have a Cavers question on is the database. Yes, the lenders have access to it. Cavers, loan brokers don't, right, Lance?
Yeah, and Vernon, the key here is you need to have a good relationship with the participant lender that you refer loans to. They can run the cavers when you submit the application, but I suspect as a loan broker, you're going to have to rely on the honesty of the applicant.
And the bank will let you know if there's an issue. Let's
Yeah.
go to Tiffany. When submitting a loan POP and we make minor adjustments to the authorization, what is the best practice to change the authorization?
Well, a lot of it depends on what kind of change you're making, but changes to an authorization on a POP loan is unilateral. So my practice is to create a servicing memorandum for a loan authorization change and attach it to the back of the authorization. Now, if I just submitted it to SBA, just got it approved, and am in process of creating the authorization, and I find out 2 days later that I have a loan authorization change, I may go back and clean up and reprint the authorization. Either is going to work, but my preference is you create the authorization, and then if you have loan authorization changes, you will have a unilateral servicing memorandum attached to the back of it.
Tiffany, we're going to hold over the rest of your questions till next week. I want to get to Katie's question, which has to do with, Lance, we have a borrower, they're delinquent on income taxes. The SBA says you may make a loan to a borrower if they're on a payment plan, but we may have tax liens. What do we do, Lance?
Run away. No.
That's what I said. I wouldn't touch it.
The SOP provides some pretty nebulous language about past due taxes. You cannot ever have use of proceeds on an SBA loan for delinquent taxes. Past due taxes is kind of a gray area. My recommendation, there is some language that talks about being able to deal with past due taxes that are on an IRS approved payment plan. But Katie, in my practice as an SBA lender, I would not make a loan to somebody with past due taxes. It's a gray enough area, and the challenge is the guarantee, the default, liquidation, and request for guarantee payments not going to occur immediately after doing a loan. It's going to happen 6, 7, 8 years down the road. And who knows what happens to the rules down the road. They may decide to clarify that. I'm just going to suggest to you that you avoid paying any past due or delinquent federal, state, or state taxes, not just income taxes, payroll taxes. Payroll taxes are a huge no-no.
It's a crime. It's a crime. If you don't pay those, you're committing a crime.
So
yeah, go ahead, Lance.
And here's the deal, Katie. If you have an authorization that shows the use of proceeds paying past due taxes, I mean, it's going to be this giant flashing light for the SBA liquidation team to dig and dig and dig.
Yeah. It's a character issue. The only way I would do it if there was a one-shot transaction where maybe there was a windfall that they didn't think they'd pay taxes on it, and they say, oh, I owe 50 grand. Okay, I'm going to work it out over 5 years. Everything else has been paid on time. As long as we're not paying those, I may consider it. But as a general rule, if you see someone with tax liens or whatever, you say, clean your act up, talk to me next year. That's what I
would. And Katie brings up an exceptional point in her second question. The borrower signs a certification that says they're not past due on their taxes.
Yeah.
And you've got a use of proceeds paying past due taxes. I don't know. That's a problem in my view. So Katie, great question. SBA is not exceptionally clear on it, but my recommendation is do not have payment of past due taxes on your use of proceeds.
Very good. News of the day I mentioned yesterday was the hearing. It's on our website. Click on it. It's 90 minutes if you want to listen to the whole thing, maybe the first 10 or 15 minutes. But this is what it will be passed. We talked about it last week, and it will happen, so it's fascinating stuff. I am doing a trip to Death Valley. If you want to go out to bucket list type stuff, call me, send me an email. I'll show you how to rent Jeep. We'll put you in someone's other Jeep. We're going to take a group of us. We're going to go Death Valley. Lance, you going to join us?
I'm going to work on it, Bob. I really would like to, so I'm working toward it. Absolutely.
For those
Hey,
of
Bob.
you, I said for those who are going to ICBA, we're going to start that Friday night. Go ahead, Lance.
Bob, occasionally we do a shout out, and one of my great friends is on the office hours today, Philip Knight, and haven't seen him on here but one other time, but would just like to say hi to my friend Philip. We are partners in crime in SBA lending over a long period of time.
Lance, tell us about loan closing.
Loan closer, week 3, we're going to talk about generation of the SBA Form 1920. And the great thing for SBA lenders, if you're using SBA 1, you can generate a compliant, correct SBA Form 1920 where all of the questions are properly answered. We're going to talk about how the SBA Form 1920 and the credit memo tie together. And the 1920, the credit memo, the loan authorization all need to have a link to one another. The information needs to be the same across the board. We're going to review the eligibility questions on the 1920 and talk about what it means when you sign that form. And I think that in a lot of banks, there's just one person that signs the 1920 over and over again on all the SBA loans. But I think it's important to understand that you're certifying quite a number of things as a lender when you sign the SBA Form 1920. And we'll talk about some of the changes over time to the 1920 as well.
Very good, very good. In the loan underwriting courses, I really have a hard time, and I appreciate your feedback on these 1919, 1920s. I know it's not exciting stuff, but I think it's very important that you go through and read it. Next week's going to be more interesting. We're going to have a case study, Grays, dry cleaners, a business acquisition transaction. We're going to go through the income statement and how underwriters should be looking at cash flow. So more crunching numbers. And when we did the course, Lance, it was originally 8 weeks. I expanded it to 10 weeks because I wanted to do a basic financial analysis for both the income statement as well as the balance sheet.
Well, and one thing, Bob, you're covering the 1919 this week. Make sure you're using the current one.
We have it.
I know you are, Bob, but I'm telling everybody else, make sure. And guys, you can generate the SBA Form 1919 out of SBA 1.
Very good, very good. Homework assignment, Lance. What do you think of this assignment? I said pick a storefront on your main street, either where you grew up or where you currently live or work, and think about what's happened to that storefront over the last 5 to 10 years. How many different small businesses have been in there? And has it been stable, or has it changed tenants? And think about why that has occurred. The purpose of the exercise is I want you to start thinking of a world view of how our main streets are transitioning.
Fine. It's an excellent question, Bob. Being a former small business owner myself and a consultant to small businesses when I was at the Small Business Development Center, location of a small business is critically important to its success. And one of the things that I try to avoid as a lender, if they pick a location where there have been 7 businesses in 10 years, I have a little concern. I really want my borrower to provide clear detail in their business plan on how they're going to overcome the problem location. So, I mean, I agree. And the other fun thing about driving down Main Street, I was doing this with my fiance the other day, and she's like, oh, they make a fortune. And I was, all the years of working with small businesses and our crew that's on the call, they have the same experience. I think sometimes the perception the public has is very different than the reality that the small business has.
Yeah. But we all, why is it, Lance, that there's always this new restaurant on this pad, and every 18 months we have a new restaurant? And I think we need to answer that. What is it? Traffic flow, parking? Just take a step back and say, why isn't this working? Or conversely, that is a great location, and that is the type of commercial real estate I want to finance, because that restaurant's been there for 20 years. They got great parking, great access, and it makes you a much stronger community banker.
Well, and in underwriting, Bob, not often do you see a location analysis section, but there should be, because my
loan brokers, you're going to enjoy this week. We're going to talk about what you need to do to get all this stuff to the bank, Vern, and I'm going to take some of your questions and incorporate that into the presentation. But what to collect, what you give the lender, what the lender is expecting from you, and obviously there are going to be different requirements that the underwriter has to do rather than what you have to do, but we're going to try to streamline this to make you much more efficient for both your client as well as the bank. Any tips on that, Lance?
Well, I think that it's important to develop a process and have a basic set of information that you're going to collect from the borrower. And the thing I try to do, Bob, is streamline it. SBA has had this reputation over the years of requiring a ton of paperwork. And it's not that way anymore. And it's not necessary to burden the small business with a ton of requirements. So I think it's important. And see, the other thing is, if you ever have an on-site SBA review, they're going to ask you to describe the process that Bob's talking about. What is the process of collecting information for your SBA loan from the borrower?
Yeah. And for the loan brokers, I'm going to give you a package of just give sufficient information to the lender so they can make a decision, the yes or no, and then you go to step 2. So we're really breaking this up into 2 different steps, so you're not wasting a lot of people's time and all the way around. We're going to make you very efficient. That's the process. Well, very good. We got a couple webinars coming up, as Lance said. We're going to do Paris. I'm doing credit memo next week. Lance is going to do Paris, which I always enjoy. I think that's a great management tool. And we're going to have Lance tell us how to document equity injection with some of the new 50-10-5J rules effective January 1. And with that, thank you all for joining us. Tiffany, I promise we'll get to your questions next week, but I wanted to move on and get the rest of this information. Enjoy the weekend. We'll talk to you next Thursday.
Have a good weekend.